Hi there, it's Malcolm and Wayne, and today we're talking about buy-to-let deposits. So back in the mid-2000s, just pre-credit crunch, how much deposit did a typical landlord have to put down?
Yeah, I mean, you could get away with maybe a 15% deposit back then. Obviously, it was a very different market back then, a lot more competitive, and lenders throwing money at the market. So, but yeah.
And we do get these variations in the market where rules and criteria changes. So at the moment, most lenders are looking for a minimum of 25%. So maybe we could just touch upon why lenders need a higher deposit for a buy-to-let purchase than they would do for a normal residential mortgage.
I think basically it all just comes down to risk. I think lenders perceive the fact that if you're a landlord, it's not the roof over your head. So if you're running into difficulty, if your tenant's not paying you, and you've therefore maybe going to struggle to meet your mortgage payments, you're more likely to let that go into arrears than you maybe would do if it was the roof over your own head in your own house. And obviously that's an extra risk to the lender that they still want their mortgage payments on time.
And of course, when there's more equity in a property in the event of a repossession, and I think people ought to realise that the last thing a bank ever wants to do is to take a property into possession. They've got to report that to the regulator in terms of how many properties to take into possession and arrears and things like that. And it's very expensive for a lender to take a property into possession as well. They've got to insure the property, secure it, find an estate agent, sell it, and not collecting interest during that time if the borrower has defaulted. So it's not an ideal situation for a bank to take a property into repossession situation. But of course, there's more equity, and then if you can just explain in terms of, because there's more equity, how does that benefit the lender? How does that safeguard the lender?
Well, as I said, because there's more equity, all those extra costs, if they were in the situation where they have to be forced into taking possession, there's more chance for them to be able to roll up the interest, for example, that's been accumulated that the landlord's not paying. There's more chance of being able to add those extra costs, the court costs and so on and so forth. And still be able to sell the property and pay the debt off and cover all the costs as well.
Yeah, of course, less chance of them standing loss. So hopefully that's given you a bit of a history lesson in terms of where we've been on buy-to-let and where we are now. And at the moment, it's normally 25% deposit.